What does $150 million say to you?
Might as well ask $200 million, because at a certain point, where does it stop? You know, it's interesting. We hear about these headline prices in New York City, but there's only a handful of units that have actually closed at over $50 million. So when you
and the record, I think, is just a shade over $100 million.
Just a shade over $100 million.
Cheap, a bargain when you're talking
at 157, exactly, and that's at 157 57th Street, Extel's new building. You know, look, there has been a tremendous demand for luxury real estate as a global market. If you look at what has happened in London, what's happened in New York, what's happened in Miami, foreign investors have been buying here because it's a safe haven for their money, and they can use real estate as opposed to putting their money in a Swiss bank account.
Does that... Well, go ahead.
You know, so are we heading toward a bubble? I mean, this is not being financed with borrowed money.
Wait a second. How about, are we in a bubble?
Are we in a bubble? Yeah.
Well, we are in an environment where we have seen rapid appreciation, and I think that's going to slow down now. What you have is we've seen essentially in the last year to 18 months, we've seen 6 years of real estate appreciation happen all at once, because basically the market plummeted in 2008, and it didn't really get into a recovery until 13. And so what we've seen is this rapid appreciation, but this is not sustainable. And there is not a very broad universe of people who are out here buying $100 million condos. And so there are a lot of headline risks there. But look at 157, the building where the $100 million sale took place. I don't believe they had a sale, a new contract for a single unit in that building between October and December 31st. So the units, there's just not that demand for that many of these units.
Don, what does not sustainable or it has to slow down mean? There are, as you're well aware, quite a number of ultra high-end developments underway in New York City. Most of them, it will show people, clustered around the south end of Central Park. But there's one downtown, as you can see. What's the future for these buildings? Developers like yourself have put billions of dollars and are putting billions of dollars into these developments.
Well, look, we're building a new building in Tribeca at 108 Leonard. We bought the New York Life Insurance Company's corporate headquarters, and that's a 400,000 square foot building. And there we're converting it. It's a landmark building, and we'll be priced around the high $2,000 to $3,000 per square foot. And our market is local, domestic buyers, and mainly New Yorkers who live and work in the city. What you see with this cluster around Central Park is all of these buyers are going after, these developers are going after pied-à-terre buyers. They're looking for foreign buyers and also those who live outside of New York City who want an in-town residence. And there is a shrinking universe of these super high-end buyers. In addition to just the instability of what's happening in Russia, the rapid decline of the euro compared to the dollar, you're also seeing for the first time now the more transparency about who's buying it. The New York Times did a series last week on the AOL Time Warner Center, and so these Russian buyers, these Malaysian, Chinese buyers who all thought that they were buying real estate quietly are now
unmasked, right?
Exactly, and I think that is going to have a significant impact and probably the catalyst for more transparency in real estate ownership too. And again, I think that's going to...
Is that a good thing?
No, it's not a good thing for the developer. Because think about it, it was like a Swiss bank numbered account. So you could buy real estate privately. You could sneak in and out and use it on occasion. Or if you had a kid in college here, you could let them live in an $80 million condo, park your money, and then one day sell it to the next person who wants to bring some money into the U.S.
Although for every billionaire that doesn't want to be unmasked, there's a new billionaire being created because of Alibaba shares or whatever else. I mean, you've got a lot of people who are getting more and more wealth because of stimulus plans around the nation. I mean, couldn't that offset this? And they're paying with cash, a lot of them.
Yeah, I think that you look at how people are valuing the money, but look at who's buying. If you look at who's buying these uber luxury top price numbers, the record before and the record for price per square foot is 15 Central Park West, where Sandy Weil, former chairman of Citigroup, sold his apartment for $89 million, and it was $13,000 a square foot. It was bought by a Russian business person for his daughter to utilize while she lived in New York City. Okay, so how many people are around the world going to buy apartments at that price and not care? There are some, but there are a lot of buildings competing for those buyers. So I think that's going to hold prices, and I think people are going to have to look at, developers are going to have to look at it a bit differently. And I wouldn't be surprised to see some of these big buildings being, the units being shrunk. Or when these prices, like the $150 million price for the Sony building, apartment there, maybe that when it goes to record ends up being 90 million or 100 million.
So is this just a cooling, or are we heading for a crash in housing values?
No, I think we're heading for a landing. I think that we, again, we were basically, the market was submerged underwater, taking an air-inflated ball, submerging it underwater, and holding it. When you release it, it pops up and goes above the surface of the water. That's what's happened here, and now you're going to see a much calmer level of appreciation. Look, 157, and let's not underestimate this, 157, 57th Street that Extel built, where the $100 million sale was, they were the only game in town.
Yes.
When they sold.
They started first.
Right. Now, these buyers for $100 million have lots of choices. Never did they have those kind of choices before. So there's greater supply, and the demand is not going to escalate much further than it has been in the past.
Would you put new money to work here in New York City right now?
Yes, for workforce housing, for luxury housing, for the domestic and local buyers, absolutely. It's the greatest market in the country and one of the greatest markets in the world for that. And I think if we can put things on the market at that $3,000 a square foot or less pricing, there's a tremendous demand for that. And then rental housing, because I think today's buyers, especially a younger generation who's now emerging into higher income, they don't have the same association with home ownership that my generation did.